Hello everybody, hope that you are doing very well and welcome to this evening's Contenders live stream where we are going to be going over imbalances. It's been a hyped one because it's so useful, honestly. I'm looking at this every single day and it's like just a key statistic. It's like one of those that you're just like tracking it when like all the time you're trading sort of things. So it's really crucial to understand this. So this is going to be the main topic of tonight, imbalances and how I trade with them. Very useful. Going to be starting off with basic attention token, bat chart of the week. You might notice I have taken off my camera, and this is because I'm feeling a bit rubbish. Just basically like 2 hours before this live stream was starting, I just come over feeling a bit ill, so to speak. So I'm gonna go through this one definitely because I couldn't postpone it, but I'm not feeling 100%, I'm not going to lie, but nevertheless, let's go with basic attention first, and then, we'll get over on here to imbalances. So, basic attention token, really simple setup. You'll have seen me post this kind of setup 100 times now. Well, 100 times is probably not enough. Like 100,000 times. 618. Okay, so the CC on the monthly. I mean, it's a setup that I'd take every single time. Okay, it's got a nice win rate, so it's a good trade to take. So I'll zoom over. Onto the chart. Oh, sorry. I'm going to zoom up over onto the chart and, we'll look at this in a bit more detail. Obviously, we're getting some action here on Bitcoin, which is pretty nice indeed. But as you all know, though, this is one thing to bear in mind. My entry hasn't hit on basic attention token, but I'm not actually going to enter if we start getting a big move here on Bitcoin because, big move on Bitcoin generally is not good for altcoins. But basic attention token. So this is what I'm really looking for. Obviously, well, okay, so I didn't notice this actually. Obviously the high has now changed, so the CC is going to have changed slightly here, but I'm not going to get too aggressive because I like the setup that was obviously this is what I had originally when I pulled those fibs. Hadn't seen this next move to the upside, but obviously in now I'd be looking at this like this. Let's be honest, but let's keep it what it was like in the original pull. So obviously this is looking at it like this, okay, so the confluences that you have here is you have this 1 hour order block, so this is like, bullish order block on top of a monthly level on top of the CC itself, okay, and then on top of the last, okay, so we highlight this, the last bit of resistance here, that could flip into support too. So you have a lot of, you have like 4 to 5 confluences here of why this one would expect to turn into support, wouldn't you? That's as simple. That's really simply locally. Obviously, this is a 1 hour chart. This is locally what we have here for a confluence region. I will zoom out and show you what this chart looks like a bit bigger because of the fact this basic attention token has just been like a range bound coin for what feels like such a long time, but it's been actually really technical trading. So I can't remember where I had my other monthly. I've been covering basic attention relatively quite a lot over on the charts and the weeks and stuff, but it's been a nice coin because we were obviously trapped between, I think it was this a weekly that was lower back, but obviously we were range bound here for a long time, like we're going back between the highs then the lows, the highs and the back to the lows, and then here on you went down to the low here. That was obviously off of our really perfect channel that we had, from the high of that channel to the low of that channel to the high of that channel. Okay, we all know how well the midpoint was respected, like here, okay, here. You got so much respect off of the midpoint of this channel. It was just a really nice one. And then where you got that flush to the downside, obviously in early May, and that has given like almost a 50% rise to the upside off the back of this. It's a crazy move to the upside. In terms of percentage gains, that's massive. So that's how you got to this point. This is all off the back of sorry, I'm losing my mind. It's all off the back of this channel holding. And in terms of targets that I'm looking for, this potentially, I'm not sure if I'm going to buy this at the moment, but this is all I have is like, I don't have any bids preset here, and this is because I'm aware that Bitcoin could get pretty volatile. So I've not got anything waiting here, although I really like this setup and I generally would always take it, but I just don't have anything waiting. I'm more than happy to buy if I have my alert go off and then just getting a few, maybe a 0.5% higher sort of thing. But ultimately, what I'm looking up for is really simply the highs. So back into the highs. Okay, so that's what I'd be looking at as a really simply a overall target here. Okay, I'm aware that it's like being a pretty big resistance level, but I do think we can run higher. Do think that we can run higher, but that's my first area of interest, about 8% more or less, depending on entry. So about maybe 6-8%, and then I'm going to be looking up next to the daily, because then you're going to have this daily with the top of the channel confluence. Okay, so then you will come up, let's say this takes a little bit of time, you're going to be running into this confluence area here, aren't you, with the daily on top of the channel. So there's a lot of confluence up there. Why one would expect a rejection at least a first attempt before you maybe get a retrace, but before possibly going back through. But let's take it a step at a time. We haven't even got an entry yet, so that's basically basic attention token. What I'm looking at here, and yeah, I'll see how that goes. I suppose. So I just saw this is just seeing Bitcoin finally hit 10,000. There goes Bitcoin, by the way. I'm really I would love to go and trade this, but I'm going to try and not get distracted. I'm going to try my best not to get distracted by this. So otherwise I'm not going to get through this live stream. So imbalances. So imbalances obviously are massively part of my trading. They are super useful. Okay, the price of the chart will move up or it move down, and it's the way price moves up, it's going to move up or it's going to move down until at least one of these criteria are met. Okay, I can see everybody going crazy in the comments. It's not going to lie, it's pretty hard for me to concentrate as well. Yeah, but I'm going to try my best. Basically, so let's begin. I'm honestly going to try and block this out as best as I can, even though I can see every single comment is about Bitcoin. But so the imbalances, okay? So the price of the chart will move up or down until at least one of these criteria are met, okay? So prices will move up until new longs no longer want to open, or prices will move, so until one of these criteria are met, prices will continue to go up, won't they? New longs no longer want to open, and then, price will look to go down, or longs are overwhelmed by shorts, and then price will look to go down. And on the reverse, prices go down until new shorts no longer want to open, or shorts are overwhelmed by longs. Okay, and this is like going into imbalances, that price is going to keep moving in one direction until they're kind of overwhelmed by the other team. Okay, so at the moment we can say Bitcoin has been pretty bullish and it's going up, okay, and Bitcoin is going to keep going up until until people no longer want to open new longs, or until shorts take over and push price back down, and price will go down until new shorts no longer want to open, or shorts are overwhelmed by longs. And what do we mean by overwhelmed? It's imbalances on the chart. Okay, so this is what we're talking about. Okay, so imbalances is volume traded at a price level in the market. Volume traded at a price level in the market can either be balanced or imbalanced. When a level is out of balance, there are proportionally more buyers or sellers at that level. Okay, I like to use 618 to highlight imbalances, and this is a thing I will change, and I would say anywhere between 400 and around this 618 obviously being a Fibonacci number, to highlight imbalances. Okay, and if you use exo charts, which I think many people will use exo charts to change this, by the way, all you need to do is go into settings here, and then imbalances, and you can change your imbalance calculation percentage here. Okay, so you could set this to 400%, or you could set this to 618%. I mean, you can obviously change this around, but that's where we change the imbalances here. I would recommend either 400% or 618% for your imbalances. Most likely everyone's probably going to use what I use, so 618, but there are times where you want to slightly lower this to 400%, okay, and this is where you can be looking at, like, what's the average volume in the day, like, are you expecting a push up, so e.g. are you expecting a range, are you expecting a break from the range, but nevertheless, 400 to 618% is the two that I will switch between, okay, never lower than 400%. and never really either higher than 618. So the beginning of a trend as well as the end of a trend are often marked with market imbalances caused by aggressive participants. Imbalances are not horizontal to each other but in steps. Okay, so when we're looking at imbalances, and this is obviously the imbalance between buying and selling a level, the imbalances are I didn't know a correct word to say this, but like steps. Okay, so we're looking at this imbalance of 1,000 contracts sold to 1.7 million bought. Obviously that's a difference of over like 600%. So that's caused an imbalance here. There's an imbalance at this price level, and it's not looking 1,000 to 1.4, but it's doing this sort of stepped view. Okay, and so we see here 12 million to 3 million. Okay, so this would be our 400% different in imbalances. Okay, and for example here under sales, we'd be looking at 1.9 million to 75,000 contracts, and here 1 million to 15,000 contracts. These are the imbalances, okay, in this sort of zigzagged sort of stepped view. This is how we look at our imbalances, and that's, I mean, really you don't need to know this because the computer program is going to actually just highlight this for you. Okay, so when you are over on Exo and you simply put on imbalances, okay, it's just going to highlight this for you. Okay, so you see how it's like highlighting all of these buying imbalances here, automatically for us. So it's not something that we need to work out ourselves manually, but nevertheless it's good to know how you're getting that. Just going to take a drink really quickly. So imbalances, a stacked imbalance is three or more on top of one another. Again, you'll see this term thrown around quite a lot, like stacked imbalances, and really simply a stacked imbalance, and this is showing a lot of aggression. Okay, so for example, what you see here on Bitcoin at the high of the wick, there's a lot of stacked buying imbalances. So this is a nice, this is a stacked buying imbalance right there. Okay, and a stacked buying imbalance is really, it's kind of like really pointing out in the charts like a really big, it's showing you there's a lot of momentum in this move. Okay, there's a lot of people interested in trading at this level. Okay, a lot more than what you would normally expect. So a stacked imbalance is simply three or more on top of one another. Obviously, the more that you have in a region, the bigger the level is. For example, if it is only three and there's nothing else around it, well, it's obviously a stacked imbalance, but it's obviously the more that there is and the more in the area that it's within is a lot more stronger of a level. And this is what I'm going to be explaining throughout the stream tonight, but just so you're aware, the more there is, the stronger this is. But, when we see stacking on imbalances, we should watch what the market does afterwards. Does the market rally? Does it sell off? Does it hesitate? Does it get absorbed? When there are big aggressive buyers, the market will typically rally. When there are big aggressive sellers, the market will typically sell off. If the market does not do what it's supposed to do, the contrary move is likely to be magnified. For example, if there are a lot of big aggressive shorts and price is not moving down, then it shows a limit order is sat there absorbing all the sells, and a move up will likely be very strong. Okay, so let me just emphasize what this means. So you're seeing the imbalances form here. So here we can say there's a lot, in this example here, there's a lot of buying imbalances. If you see a lot of buying imbalances like this, you're generally expecting this rally to continue upwards. Okay, that's what you're generally expecting. Okay, so when there are big aggressive buyers, the market will, typically rally. And if this was a lot of selling imbalances, you're expecting the market to go down. But imagine that this is a lot of buying imbalances and then the market actually starts to pull back. Well, then if the market starts to pull back after all these buying imbalances, you're expecting the reversal. So then that pullback to actually be really strong, because this is then highlighting to you that all of this buying imbalances has given you nothing, and that's pretty actually bearish. So you can use these for, we're going to be going over the examples tonight, but this is something to bear in mind. Look at the information. Okay, so this is obviously just not, this isn't giving you a trading strategy per se. Like, these imbalances aren't really saying buy or sell. It's the context that they're given to you within, and then the reactions that happen then from these imbalances are really, 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 really key. To know whether to jump in straight away. Do we market buy with the imbalances and expect continuation, or do we look at these imbalances, see absorption, and are we actually looking to sell them? These are a few things that you're going to be looking at. Okay, so A stacked imbalance is obviously, as I said, 3 or more on top of one another, and stacked imbalances can offer support and resistance levels. Okay, so another one that you could add in possibly to your trading arsenal here of stacked imbalances. But yeah, I actually do not trade off of this theory so much, but nevertheless, I wanted to add this in. So, the stacked imbalances is definitely not my theory. So this isn't something that I can, will claim to have, done. But nevertheless, this is a theory. That some people trade off of. I personally don't. I don't think it's very helpful. But I did find an example here on the Bitcoin chart where you had a stacked buying imbalance here, and the theory is that if you have a stacked buying imbalance or a stacked selling imbalance, that when that level is retested, you would expect this level to be support once more. And the theory behind that is sort of the aggressive participants that entered at high volume to push price away from a level. When price revisits that level, one would expect possibly that the old participants buying here are going to be interested once more in buying when that level is revisited. And you can see how this could work. I must say that I don't record statistics on this, so I couldn't tell you how often it works, how often it doesn't work, because I literally don't trade off of this. But nevertheless, I wanted to add this as a starting screen to some people might want to incorporate this, and fair enough if they do. So I've added that in there, but I actually don't trade off of this. But so how do I trade? So I love to trade looking at imbalances primarily when markets are grinding downwards and when we're breaking a level. Okay. So these are the 2 times when I'm really looking at imbalances. So upon breaking a level, an important level, you may want to see selling imbalances. For example, obviously, if we're breaking down, you want to see a lot of selling imbalances. If you're breaking up from an important level, you want to see a lot of buying imbalances. Okay, so upon breaking an important level here, which is obviously I'm referring to breaking to the downside, you want to see a lot of selling imbalances with high volume, and that is showing you that the bears have power to push price lower. It is always needed, in my opinion, to see this if you want to trade a breakout. If you do not see this, then one could look to fade. So if you break a level, so if we, in this example, you can see as soon as you break that low, the first thing you see is 3 million, 3.7 million, 1.3 million, 1.6 million, 2 million, 1 million, 2 million, really aggressive selling, isn't it? And, that is... That's what you want to see upon breaking a level, okay? That's really what you want to see. When it breaks the level, you want to see a lot of heavy selling imbalances, and then that's showing you that people are actually very interested in, pushing this down lower. Whereas if you had broken this level and there was no selling imbalances, then that would actually show to you that people, the aggressor is not actually coming in here. Simply the theory behind this is when you break this level, the same as like the auction theory, okay? When you are trading to the higher of the range, to the lower of the range, to the higher of the range, to the lower of the range, obviously, generally speaking, when we approach the lower of the range, you want to see buying imbalances as people view this as a discount and buy it back up. When you reach the higher of the range, you want to see these selling imbalances as people push it back down to fair value, being the middle of the range. Obviously, if you come to the low of the range and break the low of the range, and then all you see is really aggressive selling, well, then that's showing you this range is no longer viewed as good value, and people are expecting lower prices. So upon breaking a level, if you see these big selling imbalances, well, that's telling you, you can market, you would look anyway to expect a breakout and lower prices to come. Okay, rather than, I wouldn't look to fade this. Let's say if we broke a big support level and straight away you see these big selling imbalances, it's not something you're going to think, right, I might look to actually buy this now. Okay, at the very least, I would wait for it to do something like this. Okay, so let's say you did break down here on really heavy selling imbalances. I wouldn't look to long this initially, definitely, but I would be interested definitely in longing if price then managed to get back above, because then it would show you that with all of these selling imbalances, a lot of aggressive sells, if price manages to get back above that level, then that is showing you these are then all trapped traders, these are all trapped shorts, and then you're likely to get a very aggressive move back upwards. Okay, if that makes sense. That's what I would be saying. I'm just going to take a drink. So, that's what you would be wanting to see, though. So initially, definitely, you would not be looking to fade this if you see this happening. The only time when I would then look interested in a long on this is if price reclaims that level. It would offer a great. It would definitely offer a really great long. But Yeah. So if you don't see this, don't look to fade. So what would you want to see? What would you not want to have seen upon that, taking that low, is get a lot of buying imbalances being back above 10,060 here. That would signal to you that instead of continuation to the downside, you're likely to get a swing failure. So obviously in this, in this picture, you get the selling imbalances, price breaks down. But if you break this level and then you see a lot of buying imbalances and you get back above it, that's a really, 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 really strong sign that you're going to get the swing failure pattern. And then, I would definitely look to get in at market, and trade that back up, because that is showing you, especially if you see something like this where you see the lot of selling, initial selling imbalances, and then that's straight away reformed by buying imbalances back above the level. That's showing you it's a really big liquidity hunt as people are selling into, big buy orders. Possibly at limit, that then are then bought, aggressively up at market. That's how you trade these swing failure patterns. And I've got a slide for the swing failure patterns coming up, but just really key, I guess, to be aware of then is the imbalances when you break out of a range, or you break a really big reference level. Are you getting aggressive selling in that regard? You're going to look for much lower prices, or are you getting buying imbalances in that way? You're looking to fade that along with the the big players fading this, and actually look for then a long. So imbalance is really, really key to look at when breaking a level or a range. So what are the differences then between breaking a range or absorption at the low of the ranges and the high of the ranges? So here we are going to be looking then at absorption. So price approaches, in this example, the low of a range with heavy selling imbalances. It is unable to get any follow through. So let's just look at this. We're looking here at the Bitcoin chart, and we can see here, 3 million, 3 million, 1 million, 1 million, 1 million, 4 million, 1 million, 3 million, 3 million, 1 million, 1 million. So that is a lot of selling imbalance, isn't it? So this is showing you that in terms of a balance, it's heavily to the sell side. There's a lot of selling imbalances, and these are large numbers of sales. Okay, so you're seeing several million being piled in here at market on the short side, and in relative terms from here, you see one buying imbalance versus almost 10 selling imbalances. And even where there's no imbalances, you're still seeing the numbers are heavily favoring these shorts. Okay, so you're seeing here a lot of heavy aggressive selling, but price is barely moving down. This is 1 tick lower. This is 3 ticks lower. With all this aggressive selling, so much selling imbalances, if you are not moving down with so much selling imbalances, so if you're seeing a lot of selling and price is hardly moving, what's that telling you? That is telling you that somebody has sat there with a limit buy order, absorbing all of these selling imbalances. And if that's the case, remember what the first theory was. Okay, so if you're seeing a lot of big sellers and price is not doing what you're expecting it to do, that if you typically see a lot of selling, then you'd typically expect it to sell off. If it's not doing that, then the contrary move is likely to be magnified. Okay, so in this example, you're seeing a lot of heavy selling imbalances. If price is not moving down like one would expect with these selling imbalances, well, then the contrary move to the upside is going to be to be expected really when you break the market structure. And this is what I love you would say you'd want to see. Heavy selling imbalances with price hardly moving down. Price then gains, say, an old resistance. Okay, and then upon breaking this high, you start to then see the really big buying imbalances come back up. And this is a typical move that you're going to see. Heavy selling into the lows, price not really moving down, and then bought back up heavily at market with buying imbalances. You would expect a strong follow through to the upside. Okay, again, it's really, really context dependent. Okay, it is context dependent, but let's say that this was like our 618 Fibonacci level. Okay, so you had 618 down here on top of the monthly. So let's say this is the basic attention token, and many times I'll tell you I'm waiting for the reaction. I don't preset bids. This is what I would want to see upon reaching that monthly and 618 confluence. Okay, I'll be wanting to see a lot of heavy selling into the 618. Okay, a lot of heavy selling into that level that then gets bought back up at market. Okay, and then that's showing to us heavy selling into the level, bought back up at market, and you would expect then that to, that's kind of the way that I would want to trade that, because it's showing me heavy selling into the level, price has not managed to actually break, for example, the CC, and then you get a little bit of fake out with heavy sell volume, and then on the next rotation you start to see aggressive buying come in, and you would expect then that quick move away from the level to not really get not allow many people into the market. So yeah, that's the way that I would look for this. So again, another example here of absorption at the high. So this was an example from earlier in the week, and what we have here is a nice example of, again, an absorption at the high. And here you can see on XO, you see 1.4 million bought at market, 4.1 million bought at market, 5.1 million bought at market, 9.2 million bought at market. But you can see that price is not even moving. So price is going sideways, while you're seeing nearly like coming on here like 15 million bought at market, but price is not even able to move upwards. So what's that telling you? It's telling you there's absorption. Price is heavily being bought here. It's not able to go higher. And then, so what's the case? If you see a lot of buying at market and price is not doing what you expect, the opposite is likely to be very strong. And really, the confirmation here is upon breaking the low. Okay, upon breaking the low, that's really then signal to you that price, you would expect it to go up. Once it breaks that market structure, the sell-off is really, really, really quick. Okay, and here you can see 15 million contracts bought at market and prices unable to even move $1 upwards. It's obvious to us that a limit order is sat there absorbing the buying, prices unable to break through, and then rallies in the other direction. Again, I wouldn't be too premature to necessarily sell this until the market structure is broken locally, because you could have a case that somebody sat there with a limit order. You're seeing a lot of people buying into the level. But if price just comes down here and makes a higher low and then goes again, well, then, this guy can only sell so many times, So really, you do want to see some form of a market structure break. Or alternatively, as you see in this example, buying into the level, unable to break through. And then you can see here the selling imbalances start. So you get a lot of selling imbalances, break the low, and then you really get that strong continuation to the downside really, really quickly. So you could look for the imbalances, basically showing you, okay, people have acknowledged we cannot get through this sell wall, and then they're going to start aggressively selling off. But, that market structure is obviously really, really key. So yeah, that's how you view absorption with your, specifically, this is just kind of absorption. And then what you'd want to see is the imbalances out of that level where you saw absorption. Okay. So again, imbalances at highs and at lows, and this is really nice for like your swing failure patterns. Okay, so for example, this is possibly what we could have just seen on Bitcoin, to be honest. Basically, looks like maybe what we'd have seen on Bitcoin, because this has obviously got rejected. So a bearish setup I like to trade is when there are very high volume in the wick, and this is exactly what we're seeing on Bitcoin at the moment currently. So a bearish setup that you would like to trade is when there's very high volume and it's in the wick, and then price closes lower. This is a bearish sign and possibly trapped longs. This is the best seen when the high of the wick has extremely high volume, like a blow off top, and the volume is seen within the wick. Basically, we want to see stacked imbalances in the wick with large volume, and of course the candle to close lower than the imbalances. Part 2 would then be to see selling imbalances to show the market is aggressively selling off. So if we look at Bitcoin, we might as well look at Bitcoin because we have the example, and let's go down onto like 5-minute chart. Oh wow! So it ran the oh Christ, that's crazy. It ran the highs, and then it ran the lows. This is insane. It's like just like what we saw back here, but magnified. Run the highs, run the lows. It literally has just done that. Ran the highs and ran the lows. This is crazy, and it's just so. This is exactly the same as early 2019. This is like exactly the same. It's not even funny, but. Basically, it's not that great of an example because it's going to give you a Darth Maul candle here where you run the highs, run the lows. It's so this isn't going to be the best example in the world, but nevertheless, I can still talk you through this. So basically the bearish setup though would be, you get these buying imbalances. Okay, so you get the buying imbalances through a high. Okay, and you'd be like referring back to an old high here really for the swing failure patterns. Okay, back to an old high. What you'd want to see for the bearish setup is a lot of buying stacked imbalances at the highs. So this is your wick, and then price closes back down here. So you see this is the close. Price gets a move to the upside with a lot of buying imbalances, closes down below that, and then coming out of that you have a lot of selling imbalances. So this actually would have been a really nice example for like a scalp, for example, because you get the selling imbalances in the high, which are then aggressively sold into, and that's your bearish setup. Okay, and then funnily enough, you had that crazy move to the downside, and look at this, you have a lot of selling imbalances in the low, and now you're starting to get the buying imbalances back into this. So then this would be a bullish setup, but because of the context that you're in right now with running the highs and running the lows, it's kind of like, it's just kind of like crazy. But and then this is when you then be like, okay, let's just go back to the range. But there's a bullish and a bearish setup right next to each other. Okay, so you ran the highs, so you ran some highs with buying imbalances, but you actually closed that candle, and this is the wick, and then you move on to see selling imbalances. That's bearish, and you would expect lower prices to come. Generally, you would expect more continuation to the downside, but here, typical Bitcoin, you run the lows, you have selling imbalances into the lows, and then you close your candle here, and now you're starting to see buying imbalances. I mean, so there literally is a bearish example followed by a bullish example within minutes. So that's just crazy. But yeah, there you go. Welcome to Bitcoin. So this also obviously fits for trading swing failure patterns. The swing failure pattern is best traded when you see the reference level taken is on very high volume, but then retraces below the open with very aggressive selling, okay, in the opposite direction. We would also keep a close eye on open interest and volume, but imbalances are of crucial importance. I'm just going to take a drink. So, essentially that's what you would, instead of looking at these examples that I've shown you, you can literally just look at these as this is a brilliant example, to be honest, of a swing failure pattern. Okay, and I guess to obviously know where you're looking at here, it's obviously looking at these highs that were taken, high of the wick with lots of buying imbalances, but you actually close that, you actually swing failure this, and then you see heavier selling on the backside. By the way, it's pretty interesting where we rejected from, because we all know the confluence that was at 10,050 didn't quite take 10,200, but it was obviously there. You had that confluence area, but that's what you want to see on swing failures. And just like you can see in these examples that I did do here, that you take a low here on, well, this isn't on massive volume, but nevertheless you take the low with an aggressive selling, and then you see buying imbalances coming back out of it. That's obviously very, very bullish. And here on this example to the right, you can see, let me just highlight this for you really clearly. You take the low. Okay, so this is like a perfect example where you take the low, you obviously close below here, but you see all of these heavy selling imbalances. So a lot of heavy selling imbalances is obviously bearish. If you had not seen this candle here, you would be at this time, you'd be thinking this is really bear. You would be thinking this is bearish. We've broken the low on heavy selling imbalances. You would expect continuation. But the following candle has a lot of buying imbalances that take you back above the low of the swing failure. So that is then showing you that's actually really, really bullish, because then you have all of these trapped shorts expecting a run or continuation of the lows, but then in reverse effect it gets bought up with buying imbalances and you get big continuation to the upside. So this is how you would want to trade swing failures. Would be your perfect swing failure with heavy selling into the wick that gets you really below the low, but then straight away followed by buying imbalances. Okay, so imagine this candle was within the same candle, heavy selling into the low that then gets you bought back up above that low, and then you'd want to continue to see these buying imbalances buying you back up. That's a really perfect way to trade a swing failure pattern. Okay, so obviously the reverse, if you take that low and really then all you have is if you only have selling imbalances, you never get these buying imbalances, then you're obviously expecting much lower prices, you never get a swing failure. Or if you take the low and there's no real heavy selling below that low, it's not really the best thing to trade. It's just like a low volume, like maybe just better to stay out of the market for that moment in time. Like I like to see this happen on heavy volume, heavy selling imbalances. That's your perfect trades, rather than trying to get involved in these low volume trades, So then another bit on here on the imbalances. So I love to trade the imbalances when they come to big levels. For example, that on basic attention token. So when we're seeing these confluences of CCs, weekly, monthlies, you know, and like I say many times, I don't have bids preset, but I am waiting to see the reaction. Okay, so I'll be waiting to see the reaction. I'll have an alert at that level, and then I will judge and, you know, determine, do I actually now want to buy this level? Do I actually want to not even buy this and just stay out of the market for now? This is what I'll be waiting for. I will be waiting for, you know, along with a few other things, but nevertheless, I will be looking, you know, at imbalances along with those things. So I just need to take a drink. So what do we want to see as you approach these levels? Okay, so aggressive selling at these levels and the market is not moving down. So let's say we come to our reference point, let's just say the CC, and we see heavy selling imbalances and prices not moving down. That's a criteria of a bullish setup, because that's exactly what we want to see with the absorption, and then we would like to see market structure come out of it. Okay, trap traders and a market structure change. So what I mean by this is breaking through our reference level. Okay, breaking through the reference level. So let's say that this is the CC and price breaks through that level, but then we actually come back up with bullish market structure. Then we can say that there's our trap traders below the level. Now, again, that would be another criteria that we could look for to enter along. Or price gets to the level and immediately shows aggressive participants showing up with big buy volume. So let's say we're waiting for our 618, and then you see a wick onto that 618, which is then immediately bought up heavily at market with big buy volume. Then that's something that you're going to say to yourself, okay, rather than, you know, waiting for another retest of this level, let's just get involved. We've clearly seen big market participants aggressively buying this level. If that's happening, it's unlikely we're going to get another retest of that level. Let's just join in on this market. We've hit support. It's what we are waiting for. Instead of getting greedy, waiting for another retest, you know, let's trade with the bigger hand here and get involved. So these are like three criterion that you could be looking for as price approaches a reference level that you're waiting to trade. Okay, so I will always be be joining in on the trading action when, you know, this is where you can have alerts set at the level and then just wait for evidence that the market wants to trade at this level rather than just hoping. And what I mean by this is that, let's say, you know, we're waiting to buy a monthly level, but then price slowly grinds down to that monthly level, and there's no volume that comes in, there's no interest in buying that comes in, and you just slowly sell off through the level. Like, this is why if you had a bid preset, then you'd buy in on that, and then you'd lose money as it just grinds through it. Whereas if you actually see some signs of people actively buying this or actively trapping shorts, then, you know, you can then buy based off of evidence that there's actually people interested in this level. Because, you know, if you have no interest, you're gonna find yourself buying and price just grinds down through and hits your stop loss, and then, you know, it's just a waste of money. Whereas if you actually wait for these reactions, then you're not going to throw away so much money, because it's another step of like confluence triggering along. And it's like one of these ones that instead of like presetting bids at a level and just thinking it's going to hold, you're actually having evidence that it wants to hold. Again, this isn't going to give you necessarily 100% win rate, because there are going to be times that you come to this level and you know, you see all the signs, looks like it's going to hold, you know, auctions up, changes market structure, and then it just dumps straight back through. You know, that can happen. So you're not going to necessarily, you know, expect 100% win rate of this, but you could change your win rate, that, you know, made up of numbers, but let's say you could change your win rate from, you know, a 40% win rate, adding this into your strategy of looking for buys and sells, and going from a 40% win rate to almost like an 80% win rate, almost doubling your win rate from actually waiting for evidence of this level. And I believe that should definitely be possible, because no longer are you going to be just hoping that the level holds, but you're actually going to be seeing evidence that the level wants to hold. Again, it's not going to give you 100% win rate over time, but you should be seeing firstly, you're going to be taking less trades, but the trades that you do take should have more winners. So let's say on an average day, if you just preset bids, you take 5 trades. Maybe if you implement this, you're only going to be taking 2 trades a day, but then you would expect, you know, you to be winning the majority of your trades, because you're actually seeing the evidence that the level wants to hold, rather than just like hoping that it holds, sort of thing. So, you know, this is the way that I like to trade, and you know, I generally don't preset bids. So, and this is the reason why I'd like to see the evidence. So now I have here a few real trading examples from the past week. This is obviously a way that I love to trade with the imbalances, and the way that I set up my entry is when we spend the way that I set my entry is when we spend the grey. Can't even speak at a minute. When we spend the day slowly grinding down. I'm going to go over some examples here. So these are a few ways that I would like to basically trade with my imbalances, if it hasn't been clear. So price slowly grinds down to a level with aggressive shorts at each low, and then that would be a trigger for me to, the trigger here for buying would be when we start to see buying imbalances out of that level. Okay, number 2, price reaches a key level on my chart many times a high liquidity level. So I'd like to see, price reach that level, and then I'd like to see buying imbalances out of it. Again, that would be a trigger for a long. Okay, price wicks through the level with aggressive shorts, which is immediately bought up with stat buying imbalances. Again, trigger for a long. Or price breaks market structure locally, and then a short squeeze starts. So, for example, you come up to a high reference point, and where you had trap traders at the lows, you break the reference point with a buying imbalances, and then you're going to look to start that short squeeze. Notes. On a slow bleed day, and what I mean by slow bleed is just where you're grinding down and grinding down and grinding down and grinding down. When you see these sort of days, and they happen quite regularly, when you see this sort of slow price action going down with little rallies followed by further downside, the only thing that will make me buy is when the buying imbalances start. So, for example, and you see the grinding down, a little rally, but that little rally will contain little to no volume and little to no buying imbalances, and then it will fall down again. A little rally on little volume, no buying imbalances, fall down again. Little rally, no volume, no buying imbalances, fall down again. Hopefully to a reference point where then you finally get heavy volume and big buying imbalances show up. That's when I would look to enter the market, and not prematurely. That would be then giving me the sign, okay, big participants are wanting to trade at this level. They're aggressively buying. Let's trade with a bigger hand sort of thing and get involved. So until then, it's safe to stay short and maybe just trail down your stop losses on these bleed days and wait for the market to show you it is ready to change direction. And the same goes for when it's like slowly grinding upwards. When price action is slowly grinding upwards, you don't want to be looking to short that. The same when price action is slowly grinding downwards, you don't really want to get on the reverse side of it until you see the evidence that it actually wants to change direction. Okay, so when something's slowly grinding up, I would not really look to short those sort of days. I would be looking really for the selling imbalances to start and show me that it wants to trade the other way. I really don't like to get involved in a trade, on the counter of a trade when it's slowly grinding a level. So here's a few examples, and these were like real live examples over the past 1 week on trading Bitcoin, and they were absolutely perfect, lovely examples. They really, really were. And this was, can't remember the day, but when we were approaching the down at 9,400 levels, when we took the low, just need to take another drink, sorry. When we took the low, okay, you had heavy selling imbalances into the low, heavy selling imbalances, trap traders as you then close your price back above that, level. These are then all trap traders, and then we got the aggressive buying up above that level. As you can see, I was getting involved really as soon as it come back above previous day value area high, which was 912. We then obviously got that quick move up to 9,634, ended even better because from this is the selling imbalances into the buying imbalances, grinded up all the way to basically 8,900. And as you all know, that's where I closed that short position from 10,100. I managed to close my short at 9,400. And the reason why I closed that short is as soon as I saw that heavy selling imbalances, and just as it was turning into buying imbalances here, is where I literally closed out that short. And I would have only been out, the only reason I was able to do that was because I was monitoring these imbalances, and it's literally showing me, the market's telling me it no longer wants to grind down. It's trapped all these traders. It's going to head up higher. What's the point in holding on to shorts for lower levels? Because I obviously was wanting a little bit lower. But as soon as I saw this evidence that the market wants to trade higher, closed that short position. Happy I did, because, price traded all the way up to 8,900 again, and it would have been silly to hold that short. So that's real life example number 1 from the last week. And then I had another one for you here, which was from this was I think 2 days ago or 4, I don't know, I can't remember, 2 or 3 days ago, where we traded down below our reference level of around 9,380, and upon breaking that low, okay, so you can then see here you had selling imbalances into the low, which are then bought up again on buying imbalances. And again, this is early into the trade. You see them all getting really aggressive here, and this is showing you here, right here, 9,430. Price wants to trade higher. You then have a second example where prices still continued to grind up here, and you could have got in at 9,480. before price obviously in the end took off once again with so many buying imbalances and got you all the way up to funnily enough, once again around 9,800. Okay, selling imbalances into the low that get bought up at buying imbalances. Here you go, you do get a pullback, but it goes higher low, higher low, higher low, break out of that level, big buying imbalances, you end up at 8,000, 9,800 again. So those are some like real examples of what we like to see, and I'll go over on this chart and I'll go back through this. Bitcoin here is just going sideways again. It's not so interesting in my opinion, but let's just give you some examples then of what we're really looking to see. So if I just reset this view, if you have any questions, by the way, ask any questions and I'll get to your questions while I'm going to go through some like more examples here. So let's make this a bit bigger. Let me just bring this back. So let's go back a step. So when I really like to trade this is when price is grinding down. Okay, so what we're looking at here, okay, these are pretty, I suppose they're all decent examples. Here 24th of May, heavy selling imbalances. And obviously you do want to be looking at the volume. So we can see here, big selling, big selling, big selling, big selling, big selling. Here is big selling. And you do kind of get buying imbalances out of, well, it's a kind of a mixture, I suppose. But you can see here, heavy selling imbalances, okay, with heavy sell volume. But it doesn't, the problem with this, I would say the problem why you sell off again here is you don't take the market structure. So you know why market structure is so important. And here, instead of like taking this high, and that's where you would have changed your market structure if you had done something like this, well then you've changed this downtrend, haven't you? You've changed that downtrend if you had done something like this. That's obviously still a downtrend. If you had changed your downtrend by doing this, well then you've broken that high, changed market structure. Here you don't change the trend, but nevertheless, this is obviously, you could have still like got into a scalp trade or something like this, but here you do have buying imbalances out of that level, and this would have been looking good. All I would say is the volume was pretty low. You can see it's only coming in here at 68 million. So the buying, although you had buying in this candle, all the buys were really low volume. Okay, so you see every buying imbalances here is like 100,000 contracts, 18,000 contracts, there's no, you see the volume is ultra low, and that's obviously, they're imbalances because also the selling is really low. So that's why you do look at the volume. Okay, I would say if this was on, I don't know, 468 million, well then that's going to be really big aggressive buying coming in. But volume is important because the volume was, you had buying imbalances, but you also had really hardy selling. So, and then you obviously sell off again on 280 million here. Okay, you get selling imbalances, but you don't really get any of the, I guess you get it here a little bit, but it's nothing. You get quite a lot of volume that's coming out of this level, and it does get you a reaction once more. It does get you the reaction again. So you could have taken like a scalp trade on here to get you back up to these highs, but then it looks like you run into maybe a old support flipping to resistance, another sell off. Okay, where then you actually are coming down into this level. Big selling imbalances, again, selling imbalances in the low that then are trying to get you out of this level. So then you could say that then this is trap traders at the low, because you see there are a lot of sellers here and it's on relatively high volume, 136 million. Again, I wouldn't be trading this on the 1 hour chart, so it's quite hard to give you this. I only use this while scalping, but nevertheless, you see a lot of trapped shorts down here at the low that then relatively gets bought up on your buying imbalances in all of this candle. Again, you get a pullback, but the pullback is again, you see the volume here is ultra low, so like 70,000, 76,000 contracts, 7,000 contracts. This is ultra low volume. Okay, I'd only be interested in balances when they're like this, like 1 million, okay, 2 million. Like these 100,000 contracts are nothing, so it's not really so interesting. But basically, I'll try and explain an example of what we're really looking to see. So price action is generally going to be, on a day, is going to be grinding down slowly like this. Okay, we're not interested in buying at all when it's grinding down like this. When we get interested in buying is when it does another sell-off, and then you get the buying imbalances out of this. Where if and when it shows up with the buying imbalances at high volume, that's then when you get interested in the long trade. Okay, and not prior to that. Okay, not prior to that. For example, in both of these examples, throughout the day, you were seeing just grinding days. They were just grinding down slowly and slowly and slowly and slowly. The whole day was spent grinding down, and it was not until you had the buying imbalances show up with volume that you get interested in the trade, okay, to the long side, or obviously closing shorts, because on these slow grind days you're better off trading stop losses rather than trying to close at a target, because when it grind, you're just better off doing it. So when these selling imbalances show up, then you can do like I done on this one and get out of that trade early, because it's showing you finally there's big participants now interested in this level. Okay, I'll go over the questions because maybe I've explained myself well enough there. So let's see what people are saying. Slide 12. How would this look like in level? So slide 12. How would this look like in level 2 order book? Because there you see all trades including filled limit orders. So no, this is only showing you market orders. Okay, so this website here is, this footprint chart only shows market orders. This is not showing any limit orders at all. So this is 4 million bought at market, 5 million in this candle. So that was 4.1 million bought at market and 900,000 sold at market. So it gives you a delta of 4.1 million, but this is only market orders. This is not showing us limit orders. Okay, that's not showing you limit orders. But yeah, obviously your order book. Let's just load up the program. Your order book is gonna, this is why I wouldn't use this alone, and I am looking at the order book when I scalp, obviously, but this is the thing. You don't use any of these tools alone. You use them in confluence with other tools. So for example, when I'm seeing absorption, then yeah, obviously you could be looking at the order book, and you can, it's only going to be helpful. So if we come over to the order book, so what it would look like on the order book is, for example, you'd see a lot of like buying into the level. So for example, this isn't going to be a wall, let's say, but what you'd see is a lot of buying at the level, and then you'd see your limit order there. So here you can see it's like negative 400,000 contracts, but you'd see maybe like 1 million there, and then you'd see all the buying that's going into that level, and then it's really obvious that there's a limit order there. I mean, visually you can tell, can't you, visually from this, that there's obviously a limit order there, but obviously your order book is going to give you 100% confirmation sort of thing. So again, that's why they're useful to use them both rather than just one or the other. Like you use them both sort of thing. So you would definitely use the order book, and the way that you'd know is because you'd start to see all these bids going into a limit order that you can see as sat there, because you'd be looking at the size of the limit order, and that's how you can see a sell wall on the level 2 order book. So another question. So absorption example, can this be looked at also as profit taking and not reversal? Can you tell with looking at open interest? Yeah, 100%. So the way to tell whether it's somebody getting aggressive and buying or whether it's actually somebody closing out is open interest statistics. So let's say you're seeing a lot of buying imbalances, but open interest is just falling, well, then that's likely people closing out of their positions rather than, well, it's obvious then, isn't it? So if you see a lot of buying imbalances, but then all you see is your open interest declining, and obviously your net positions declining, then that's showing you that's people closing out of their position rather than longs opening. And the same goes for, if you see a lot of selling imbalances here, like you saw a lot of selling imbalances here, but we can say that this was more of a stop run. So this is more people closing out of their longs rather than new shorts opening, because you saw the net longs go down, net longs go down, net shorts go down, open interest go down. So this was a stop run of the lows because people are closing out rather than new shorts opening. So on the actual high, you saw a lot of new longs open. So these buying imbalances are likely going to be trap traders, because you do see a lot of buying imbalances and a big increase in wow, a massive increase in net longs. So yeah, these are definitely trap longs. Really, yeah, they're trap longs up here. So this is obviously pretty bearish, and then you run the low and it's more of a stop run. Okay, so that's how you tell those differences. So does that mean when you break a low with heavy selling into the low with selling imbalances, for you to get bullish trade is when price claims that level? Yeah, 100%. So if you break a level and all you see is selling imbalances into that level, you don't want to get aggressive or buying that early, do you? Because it kind of doesn't make sense. If you break a really key support and then all you see is heavy aggressive selling and price moving down, you don't want to buy that, do you? You want to buy it once you see evidence of trap traders, and that would be like a swing failure pattern where you get back above that level. Okay, get back above that level, start seeing the buying imbalances, you're good to go to get into a long, not early. Otherwise, you're going to throw away money more times than not. So yeah, you definitely want to wait for the reclaim. Can you still use the imbalances on the CC? Yeah, 100%. So we'd be looking at the imbalances when you reach these reference levels. So monthly level, weekly level, CC level, you know, our technical analysis. Yeah, that's when we'll be looking for this. And, you know, the things that we're looking for as we reach that CC are obviously our three types of, you know, the three things that we're mainly looking for. We're going to be looking for, when we approach that level, absorption, or are we going to be seeing like trap traders? Are you going to be seeing, you know, just wicks onto that level and aggressively bought up? You know, you're looking how the market reacts off of this, and you're looking for the evidence of how it reacts rather than predicting what it's going to do. You're waiting for the evidence of what the market is actually going to do, you know. Let's say you just started a 5-minute bearish structure and you continue to see selling imbalances on the lows, but it hasn't hit any support in higher term time frame, but there are also buying imbalances. Would this still be bearish? I think I understand the question. So basically, I wouldn't look to get involved in buying and selling if it's not even hitting a level that I'm interested in. So if I'm just looking at the day and how it's progressing, okay, and I'm seeing selling imbalances, and then I see a bit of buying imbalances come in on volume, but it's not at a level which I've designated I'm interested in, I'm just going to ignore it. Okay, price can move on without me. If you know, I'm not just 99% of the time, if that happens, I'm not going to be probably even looking at the chart, because I'm getting, you know, I'm just probably not even going to be looking at the chart, and then that could take off without me or whatever sort of thing. Like, unless it hits my alert, I'm not going to be monitoring this, you know, 24 hours a day. So if price is selling off heavily and then it starts getting bought up really quick, and you know, that can obviously happen in the day, and it moves without me sort of thing. So I'd only get interested in any of these things when an alert goes off and I start looking at the computer and looking at it sort of thing, if that makes sense. So are there also buying imbalance? Would this still be bearish? So again, I'd say it has to be context dependent on why are you bouncing off this level. If it just starts happening randomly or at a point where you cannot identify a technical confluence, then it wouldn't necessarily be bearish that that's happened. But I would just say you wouldn't be interested, you wouldn't be trading it, because like you wouldn't just start randomly buying just because there's buying imbalances, you know. When you market buy in after seeing the buying imbalances, do you put a stop loss under that wick or look too lows back? So when I'm day trading, I never place a hard, I'm generally never placing hard stops. So I wouldn't be placing a stop under the wick. I wouldn't be placing it too high lows back, really, because that's like how I trade with soft stop losses. But the way that I teach is, yeah, you would be really looking for, I mean, I always say wider stop losses are better. Like I always say wider stop losses is better, period. I think tight stop losses are you know, people lose more money because of tight stop losses than they do in validations. So generally speaking, you know, it's not so much do you place your stop loss at the low of the wick, do you place your stop loss too high lows back, you place your stop loss at invalidation. So are you wrong in this trade setup at the low of the wick? Are you wrong on this setup too high lows back? You have to place your stop loss where you're wrong on that trade idea, and whether that's too high lows back or the low of the wick is obviously irrelevant. It's more like where you're wrong on the idea. I give these like terms, too high lows back, low of the wick, like these are terms that are really easy to understand and people can put into their trading, but really the way that you're using your stop loss is at invalidation. So you know, although I know I've said it in the past, like put it too high lows back, and that's just a wide stop loss really, isn't it? So yeah, generally speaking though, if you see this, then yeah, the low of the wick is likely going to be your invalidation, isn't it? So if you get that swing failure pattern, so if you get something like this, okay, and you see heavy selling imbalances that are then bought back up and buying imbalances, you would say your invalidation is the low of the wick. If you've seen really heavy selling with trap traders that's then bought up aggressively, you're wrong on your idea that that's bullish if it comes back down here, aren't you? So you in that regards, yeah, your stop loss is the low of the wick, because if it sells off heavily, bought back up aggressively above that level, it has no need to come back down to that low. And your theory is these are the trap traders, you're going to squeeze them and move up. If price does that, you were wrong on your idea. Your trade setup was invalidated. So in that regards, yeah, it would be like the low of the wick in those examples for the swing failure patterns. Okay. Um, when trading on these imbalances, do you still try and get in at limit order, or you just get in at market most of the time? So it kind of depends. If there's a lot of heavy volume, then I'll just get in at market. Okay, yeah, I have no, if the market's showing you that it wants to move away from this level, if you wait for the limit order, you're probably going to miss the move. So yeah, you got to get in at market on these examples. How can you use imbalances for a pullback before continuation? How can you use imbalances? So I suppose what you mean is, how can you use imbalances for a pullback before continuation? So do you mean here that you move up and then you start getting aggressive selling on the pullback and then an increase in price? I mean, that's kind of not what you'd want to see generally, is it? Because you generally are looking for the move up and then the pullback on declining volume before moving back up again on increasing volume. So you, generally speaking, I mean, obviously, yeah, like on some of the examples I've shown you today, your imbalances could be on like 10,000 contracts. If you had 10,000 sells and only 1,000 buys, you got an imbalance there showing. But obviously, the volume's ultra low. So again, you have to use this in the right terms. But generally speaking, if you impulse up on heavy volume, your pullbacks on lowering volume, and then you increase again on increasing volume. So you generally aren't going to see these heavy volume imbalances on a pullback. Generally speaking, So does that mean when you break a low with heavy selling into the low with selling imbalances, for you to get bullish traders win? I swear I've answered that question. Yeah, exactly right. So if you break the low, you want to get back above that level, and then yeah, that's obviously when you get into the level after the reclaim. Because you have predicted this pump looking at the imbalances. You mean this move to the upside today? In my opinion, yes, it could have been predicted, because the reason that you moved up here was as soon as you reclaimed the daily open, and this was obviously a reference level that I was looking at today. And basically my saying or thought process was, if you get back above this daily open, it was really bullish. So because then you will have bounced. Okay, this is what we were looking at earlier in the day. Your previous day point of control, you bounce above that previous day point of control, and it was really bullish, or giving you bullish signs if you get back above daily open, because that was a really big sign of strength if it done that. And then you can see, oops, didn't try and do that. As soon as you got back above daily open, you had this massive move to the upside. Okay, and you went from daily open 9,780 all the way up to 10,180 again. We would have wanted to have seen some sort of pullback, but nevertheless, the signs were there that it was likely to do this. In my opinion, it was looking a bit more bullish today because of the fact you did bounce off that previous day point of control, and then instead of seeing this reject, you just come back up once more to that high, another time to that high, with continuous higher lows today. So, I mean, yeah, it was looking likely that it was going to break up, but nevertheless, would have been pretty hard to have traded, because you'd have had to have got in that market on it, and it happened pretty quick. But yeah, I would have say you could have predicted it was going to move up today. And if you look in the chat, like my posts today were all bullish posts, like saying I do think it's going to move up. Let me see if we have any other questions in here. Just seeing if we have any other questions. Yeah, that's what I was saying earlier today. I was just looking for my post, but yeah, I had the slight bullish bias, and that was only because of we bounced off the middle of our channel that I was looking at and trading. We obviously bounced off of the previous day point of control, and then we were making like higher highs and higher lows into higher lows into that high. So it was looking likely that we were going to obviously move up today, but unfortunately, I never got the pullback, so I didn't trade it. I didn't manage to trade that breakout, but kind of lucky I didn't, because if I don't know. But yeah, let's see if there's any other questions. Nothing else has come into the chat, so let me just read here. I'll read this for a minute. yeah, a lot of people writing that they were distracted by the Bitcoin move. Gonna have to watch it later. Not gonna lie, I'm a little bit distracted by it as well, but it's just one of those things. If I got distracted by this and come off trading, I wouldn't have done the live stream. So um the last questions that I can see here is, so if there is a level you are expecting at the lows and price breaks through it with selling imbalances that then closing back above it, you never get the buying imbalances after 2 candles. Never say never in trading, because obviously everything's possible, but you know, you generally want to see those selling imbalances that are then bought back up on the next candle. Oh, there you go, Mike's answering. But you know, you generally want to see those buying imbalances come back up you know, straight away on an increase in volume, obviously. Yeah, so there you go. There's all the questions that have come in. So yeah, I think many people are going to be in the same boat maybe then, that you were distracted by the Bitcoin move. So you might have not really paid so much attention to this live stream, but nevertheless, obviously we'll put it on the website so you can watch it back when Bitcoin's calmed down a bit. But it looks like as if it's just going sideways now anyway, so a little bit of 5-minute drama. But you'll be able to maybe have some free time over the next hour as it goes back into the range to rewatch this live stream, or in the next coming days. I see some people saying, I guess I could have not done this live stream and just gone into live trading straight away, but I wasn't really feeling it, to be honest. So I really was actually looking forward to the Imbalances live stream, because honestly, for me, this is like massively helpful. And I know so many people really were anticipating and waiting for this one. So I would have felt a bit mean if I just started live trading. So yeah, there you go. That's why I didn't live trade it. And also, yeah, I think, is there anything else that I wanted to say? I don't think so. I would just say, yeah, I'd recommend you to watch this one over a few times. If you then do have any other questions that I may or may not have missed, or you know, maybe you just don't have any questions because you're off trading Bitcoin, well, just write your questions over in Discord, and you know, I'll get back to you later today or tomorrow. Okay, one, you know, it might not be tonight, because I'm pretty keen to go and trade this actually, but nevertheless, I'll get to your questions tonight or tomorrow. So yeah, I hope that this stream has been extremely helpful, because honestly, for me, it is like massively helpful for my own trading. So I hope that I've managed to give that across to you today, and I'll catch you in next week's Contenders live stream, or over in the group chat in the meantime. So cheers everybody, thank you, have a brilliant evening, go and enjoy trading this, and I'll you know, any questions that you might have, just write them to me, and I'll get back and help you. All right, cheers, thanks, bye.